It's my honor and pleasure to introduce my friend Max Watkins. Who is Max Watkins? Max Watkins is the person whom I met a few months ago, and as I was running into deep financial problems about some mortgages and all that, I came to see him through a friend, and the way he resolved the issues and the problems of my finances, it was mind blowing. It was unbelievable, and I have, I fallen in love with him, and I have motivated him and persuaded him to come to our TV lounge and talk about money. Who is Max Watkins? Max Watkins is a professional who manages and runs, and he's CEO, president of Watkins Capital and Watkins Funding, Capital Funding, and at the same time he has association with federally chartered banks. He helps people. He enjoys. Of course, the goal is to make money, but at the same time, his goal always is to help people resolve their problem and make them happy. When they are happy, he is happy. So let's talk to Max Watkins. Mr. Watkins.
I can appreciate that. Thank you very much. Thanks for having me.
Can you please tell us something about you? When did you start this business? Why did you start into it? Where have you gone from where to where?
Absolutely. Well, I started this business probably about 17 years ago, fresh out of college. Started as an LO, which is called a loan officer. Worked for a company out in Long Island. Did relatively well there. The company had since shut down. I had a passion for it, so I decided to create a company of my own where I could kind of create my own structure and things of that nature. The passion or the thrill that I get out of it is just being able to help people, whether they're finding a dream home or whether they're building a business for themselves, but to put them in a position of strength to acquire the funds that they need to kind of get them to where they need to go in life. That's kind of my story. That's who Max is.
Okay. Right now, you are managing a funding company, and at the same time, you are associated with federally, chartered banks. Can you tell us something about your funding company? What are the programs? How are you managing it? And how fast does it take? So can you tell us about the programs you have? Because the community who is watching this show comprises of different kind of people: professional, skilled, contractors, builders, bankers. So it is a mix of all kind of people, and this program is being watched internationally and nationally in the United States.
Great. Okay. Well, allow me to clarify. What we do is Watkins Capital Funding itself. It's an organization that I started where we do a lot of creative funding. When I say use the word creative, we have relationships with hedge funds. We deal with private money lenders and things of that nature, and we are affiliates where we sign affiliate agreements with certain entities, whether it's hard money, private money, and soft money. On the banker end of it, what we do there is that's your traditional banking where we deal with Fannie Mae, Freddie Mac, FHA, conventional loans, and things of that nature. However, they require a certain credit score or FICO score. And normally, typically in the bank, we look for anything from a 620 to a 680 on conventional products or programs, as well as FHA. On the flip side, the relationships that we have at Watkins Capital, where we get creative, is we can do a credit score as low as 500, which most people think, oh my God, that's impossible. How do you do a 500 credit score? So we have certain programs to accommodate the needs of almost anybody. Our goal is to get people to their dream house, and we work very hard at doing that.
So when you're talking about a dream house, you can go from 500 and up.
We can.
Okay, so traditionally the minimum score is around 620 to 640 with a lot of people, right?
That's accurate.
Okay, so if somebody has 500 because of whatever reasons they are, how would you get them a loan? How would you do that?
Sure. Well, what we do is we understand that there's something called, circumstances, and not everyone has the same circumstances, and things happen. I've dealt with cases where people had excellent credit, just like yourself or myself, and they've gone through very bad divorces. There's been identity theft. There's been isolated incidences that caused them to go from a 700 into a 500. So what we don't want to do is we don't forget about those people. The programs that we have, they're unique. They're a little bit different. Because you don't have a 650 or a 700 credit score, you're not going to get that 3.5% interest rate. That's going to be a little different.
Okay.
You're not going to be able to put 3.5% down where you would with an FHA loan. But you know what? You got to put 10% down, and you might be looking at a 7 or 8% interest rate. But we will get you, to where you need to be, and we'll help you get there.
Okay, when you are saying that that the rate will be slightly higher than the market rate, that's what you're saying, right?
That's accurate.
Okay, let me ask you a question that someone gets into a program with you, and their rate is 7 or 8% right now, whereas the traditional market rate is 4 or 5%. Is it possible for them to come back to you after 2 3 years when everything has been going smooth and all that, and renegotiate and get the interest rate down if the rates are down at that time?
It's very possible. The rates are always going to be better than what it is that they're getting them for, because they understand that they're getting a higher rate because of their position. However, within 6 months, we do a little bit of we do a lot of things, and we try to keep everything under one umbrella when it comes to construction funding, personal lines of credit, business lines of credit. I can go on and on and on about the programs that we have. Can they come back? Absolutely, they can come back. In fact, we welcome it. We can help them with what's called credit restoration and building their credit. And then once the credit is built to that 620 that we look for, we can go ahead and refinance them into the proper loan that they're looking for to get them a better rate.
I see. The other day, when we were on the phone, you told me that you are doing some financing and loans and mortgages for non-resident people who are living abroad, and
Correct.
they want to invest in real estate here. You are willing to do it. Can you explain to me something about it?
Sure. What we look for people that are living abroad, we are looking for, all they have to do is you have to have a passport.
Okay.
So we want a passport. So here, where we verify with a W-2 or a 1099, 1040 tax returns and things of that nature, they're not going to have that information. So typically, we look for a reservoir, if you will, of that country where they worked, or where they're currently employed at. If they were looking for a vacation home, we only look for a resume. They have to be currently employed, and then we do due diligence. As long as we can research the company, and the company is everything that they say it is, and they have a passport, and they're making their money, we don't have a problem with them.
But having a passport is not enough, because to travel to the United States, you need the visa of the United States also.
Right.
So how would they get the visa to come over?
No, what we require is, I'm telling you what we look for.
Yes.
If they're currently here and they're a green card, if they're working on
That's a separate issue.
right, if they're working on a green card or something like that, typically if they've just arrived to the United States and they haven't been here that long, doesn't mean that they wasn't making money anywhere else. So what we do is we do due diligence. We research. We want that information from where you were working, because ultimately, in banking, you have to have we look for 2 years. We want you to be employed for 2 years consecutively, and we don't look for any gaps in employment. So when you're dealing with a person that's a foreigner and they've been here for 6 months, then obviously that 2 months of employment is not going, that 2 years,
Oh, I see.
forgive me, is not going to be there. But we know that they had a history before they got to us. So we want the previous information, and we do due diligence on that company, meaning we research that company, we contact that company, and they say, yes, this person was here for 1.5 years, and you've been employed in the U.S. for another 6 months. We'll go ahead and we'll accommodate you. Even, in fact, if you're not working in the U.S. and you're here and you want to purchase a home and you're in another country, we'll work with you on that as well.
Okay, you have really talked about two different things at the same time. Uh, One is the green card. Green card holders are the legal resident of United States,
Hmm.
and they do not have the history in the background for a number of years, but they are technically as good as citizens, except they cannot vote.
Right.
So they have the same rights. So green card, what you are saying is that anyone who has green card and has recently arrived in United States but had a employment history in the back
Right.
and in their hometown
Right.
countries, you will entertain the applications which are not entertained normally by
Right.
other banks.
To say the least. And to keep in mind, this is all private funding.
Okay.
And the reason I had brought up green cards is because working in a bank, we deal with a lot of green card holders, and a lot of green card holders have a lot of challenge just due to credit history. When you're purchasing a mortgage, we look for three trade lines. And your open trade lines are something like an American Express, a Discover card, a Sears card, a Macy's card. So we look for those things. So a person that's coming in from another country, they're trying to get established. Does that make sense to you? They're trying
Yes.
to get established. So they're not going to have the credit that you or I have. So a lot of times when you hold a green card, that's a challenge for an individual. Or they'll say, well, you know what, how are you 40 years old and you've had a Capital One credit card for 6 months? And that doesn't really look good when someone's evaluating your history. Do you understand what I'm saying? So I don't want to get too involved with a green card holder. It's a conversation that I'd have to have with an individual because it's very unique and it's complex from time to time. I'm just trying to throw it out there that I understand it, and they run into challenges. We entertain those and we overcome those challenges.
We will take a short break right now, and we will be back and we will talk to Mr. Watkins again. Can I call you Max?
Please.
Thank you. We'll take a short break. Thank you. It's my honor. Welcome back to the show. Right now, we are talking with Mr. Max Watkins, who is CEO and CFO, the chairman of Watkins Capital, and we are trying to find out the information about the mortgages and about funding so that this information can help you in deciding what to do, how to do it, where to go, and whom to use. So, Mr. Watkins,
Yes.
Max,
Yes,
welcome,
Max,
welcome to the
Max,
show.
please, yes.
Welcome to the show.
Thank you for having me.
You have been very kind explaining us the one part of the mortgage, which was about the green card holders. Let me ask you a question. If somebody lives abroad and he works abroad and he plans to come to United States eventually, but right now he does not live there here, how can you get him a mortgage for a house, and what kind of a down payment is expected from them?
Well, the first question I would have to ask is this a permanent residence that this person has, or are they looking for a vacation home?
No, no, they are looking for a home.
Okay.
Eventually, when they retire or when they decide to leave the job in the other country, they want to come to the United States and live here.
Sure.
But in the meantime, they want to buy a house so that they can sustain it, and they can establish their residential situation.
Okay. So for a primary residence,
Right.
A person that lives abroad, of course, they're going to have to give us I constantly say, a copy of identification.
Right, naturally.
Okay, so we want to identify that who they say they are. We want to know that they're gainfully employed. So
Okay.
we're going to do some due diligence to find out that they're gainfully employed.
Right.
Along with that, there's a couple of there's an intake form that's filled out in its entirety. Once they provide us with relevant information, we go from there. I think your concern is you're saying, okay, a person that's in another country, that's looking to come to the United States typically has a lot of challenges getting
Yes.
a mortgage.
Yes.
And what is it that we're doing that other banks are not doing in order to get them a mortgage? It's the same program where we have a program where we offer, it's called a no-doc loan. So
Okay.
you're a United States citizen, but it's called no doc. So what is a no doc? That's exactly what it is. We don't require any documentation
I see.
other than some bank statements, a credit score that we look for, and an intake form. It's under the same guidelines.
But they will not have any credit score because they never established a credit in the United States.
Right, but they do have a credit in the state and the country that they're from.
No, but they don't have the credit agencies there in those countries.
But we have a program that we do our due diligence.
Okay.
So it doesn't matter where they're coming from. We do due diligence, we do the research, and then we get them to where they need to go.
So you mean to say when you are doing the due diligence for a person who is living in India or Pakistan or Bangladesh, they do not have the credit agencies like we do have here.
Right.
So you will call the employers, or how would you get the information from there?
What they do is we look for good references.
I see.
So we'll speak with someone and then we'll reference.
I see.
It's again, I don't have the form with me, so I apologize for that. But everything that you're saying, and you're asking very good questions, which I can appreciate from you. But all the questions that you have, there's a form or a formality that they go through. They fill it out in its entirety. Once it's filled out in its entirety and what's there, we then in turn do our due diligence. We come back with our findings, it's presented to us, and then we make a firm, intelligent decision if this person qualifies for a home or not.
You mean qualify in the sense that they have been making that kind of money. But what kind of down payments are expected from people who are living abroad?
10%.
10%.
10% down.
So what is the risk there for you, if they cannot, meet the obligations from living abroad?
Well, it's the same risk that we take here. It's something we try to keep under one umbrella, but it's the same risk that we have here. When you have a person that lives in New York or New Jersey, and then they purchase a house in California or Florida.
I see.
It's not a primary residence.
I see.
It's considered an investment property or a vacation home. It's really no different.
Oh, okay. Now, can you please tell us about construction loans, and do you do any financing for the contractors who have the contracts for New York City or New Jersey? Do you do any financing for them?
We do, and what I want to do is, again, that goes back to the affiliates that we associate ourselves with.
Right.
I want to be very specific on what it is, because we're talking about mortgages. So at the bank, we're doing traditional mortgages. And
Okay.
again, that's our FHA, our Fannie Mac, Freddie Mac,
Right.
conventional loans. That's one aspect of it.
Right.
So when we got into when it comes to construction and building and land acquisition and things of that nature, that's a whole nother component
I see.
that we're talking about. When we're talking about,
You handle it.
correct. So I want to be very clear that at Watkins Capital we keep everything under one umbrella. Do you know what I mean? So
Okay.
I don't want to confuse your audience with what it is that
so
we're saying.
let's leave the topic on the side
Sure.
for today's meeting.
Absolutely.
Let's talk about. Let's keep talking about mortgages.
Okay.
When you are using all these names, Fannie Mae, Freddie Mac, and all that, I understand.
Right.
But a lot of people do not know what are you talking about.
Right.
So can you give us briefest possible explanation? What is Fannie Mae? What is Freddie Mac? And what are the names you are using right now?
Sure,
What is
sure.
Fannie Mae?
Well, let's talk about when you're talking about an FHA program. Let's
FHA,
just go
yes.
for that, which is considered a HUD program. These are all government programs
Okay.
that we're talking about.
Right.
So when you're talking about a government program, you're talking about a very good interest rate.
Okay.
And your interest rate is in the threes. They normally start about 3.5%.
Okay.
They require a very low down payment.
Okay.
Your down payment is again, it's 3.5%. With that down payment on an FHA loan, it requires what's called insurance. So when you do an FHA loan, you're going to pay mortgage insurance
Okay.
on that loan. as opposed to when we talk about traditional funding, if we talked about your conventional loan, on a conventional loan, which requires about a 650, 680 credit score, so it's a little bit higher than that 620. As long as you can qualify conventionally, as long as there's 20% of equity in the house, or if you're able to put a larger down payment down, you'll avoid mortgage insurance.
I see.
Meaning you would have a better,
You don't have to go to FHA then.
No, you don't.
Okay.
You don't.
Now, so what is Freddie Mac?
Again, that's another program.
Right.
That's a government-funded program. Freddie Mac offers basically the same. It's the same. It's a Jesus. There's so many different loans under those particular programs. Freddie Mac is another program. They can go as low as a 600 credit score.
So who determines that when we come to you, or my viewer, one of them come to you, how would you determine that where you want to place this program? In Freddie Mac, Fannie Mae, FHA, conventional, who is the decider? How do we decide? As
Sure.
a layman, I don't know what are you talking about.
Sure. Well, what happens is the decision it's quite clear. If you come to me, the first thing we do is we go through a qualifying process.
Right.
So with that qualifying process, you're going to, again, fill out an intake form. So once I get that intake form, the first thing I'm going to do is I'm going to run your credit.
Right.
So when I run your credit and I'm able to look at your FICO,
Right.
which is just a score, it's either going to be good, fair, or poor.
Right.
It may be excellent. That's the determined factor. If I'm looking at a credit score and it's a 600 credit score, then we know right there that that's not going to get you a conventional loan. We also know that we're going to have some challenges at getting you where you need to go on an FHA loan. So that's when I'll say, hey, listen, these are some issues that you have going on. I can do what I can do to help boost your credit within a month or two. If you follow these guidelines, we can get you to where you need to go. Or I can do what you need right now with hard money or private money, but you're going to pay a higher interest rate. And then I would let you make a firm, intelligent decision on what's best for you.
You did not. I'm sorry, I didn't get it very clearly. When you are saying Freddie Mac and Fannie Mae and FHA, so how would you decide to go to Fannie Mae or Freddie Mac? You are deciding it, or somebody?
Well, no, just to circle around and go back to what you asked me, because you asked a very specific question. As you reiterated, you said, how do we determine what's the right program for us? As a professional,
You guide us.
right, we'd give you the guidance. And I explained to you, once you fill out an intake form,
Okay.
we're going to pull your credit. And
So it is based on credit,
Right.
That you decide that you are going to Fannie Mae or Freddie Mac. So what you are telling me is that the Fannie Mae requirements are different, the Freddie Mac requirements.
Yeah. Anytime you're dealing with different programs, there's some different things in all of them. Again, FHA is a program that is the
Is
only
the first time buyer.
Well, yeah, it's a first-time homebuyer program, but it's also a program that if you have FHA, it comes with what's called mortgage insurance.
Right.
Meaning you already have insurance on the property, and then the government puts insurance on top of it, so you're responsible for paying insurance twice.
But
So,
is it very high, the mortgage insurance?
it depends on the price of the home. You know what I mean? But typically, it's anywhere between $236 a month up into about $280.
Are
Depending
there
on the price of the
limits?
home.
Are there limits on the property value for FHA?
Yes, there is.
What is
It varies, because if you're buying a house in Georgia, then they're going to have a certain allowance, if you will, on how much they're willing to spend. I don't believe in the state of Georgia you can go over $350,000 on a house in that particular program. But again, I don't have my notes with me.
How about New York, New Jersey?
I don't want you to quote me. Typically, I'd like to go in my worksheet, because we deal with 50 states at my bank. So I wouldn't know. They're different for every state.
Okay, but there is a max.
You
cannot buy a luxury house out of FHA.
Correct. You're not going to buy $1 million home.
No.
Those are considered what's called jumbo loans. So
Okay.
you're not going to buy $1 million home on a FHA program. That's not
But you
gonna
can
happen.
buy that in Freddie Mac and Fannie Mae?
Yes, you can.
Jumbo loans.
Yes, you can. You can do jumbo loans.
Okay, I want to ask you a question. Why should somebody come to you and not go to other banks, your competitors? Why should we come to you?
Well, I think that people should come to me. I shouldn't say it's not just why should they come to me. They come because we tend to pride ourselves on the standards of excellence. We constantly tell people we know what we know, and we know and what we don't know, we don't know. But we're sincere, and we care about getting people to where they want to go. The thing is, we make it a point to really be significant in one's life and build a good relationship, but not just a relationship as a lender, but we build a partnership with each and every customer or client that comes to us.
Max, I thank you very much for your time. You have been very kind and trying to explain us. We are all laymen here. Most of us do not know what is going on, and we are scared also because of what has happened in the past. And there are a lot of, not very honest people doing this business. And we will invite you again, Max, to do a program with us at length with when you will have all your notes also with you, and then we would like to talk to you about financing of the construction loans, about acquisitions, about mergers and all that, because a lot of our people are getting involved in those businesses, and some of our viewers also do business with New York City and New Jersey state, where they are contractors, builders, and all that. So we would like to talk to you about how can you finance them and help them. Thank you very much for coming here.
Thank you for having
It's
me.
our pleasure, and we will see you soon, very soon.
Awesome.
Thank you.
Thanks again.
Goodbye. Welcome back to the show.